us. So we come back to the event today, and that is investment and other incentives. As we go along, I will talk about what exactly this means and also what are the things in store for us in this very, I would say, productive and beneficial field of investment incentives. So now, where do you get these incentives from? The incentives are available to the public, that is on the small condition that you fulfill whatever is required by the governing body, which would be, as you will see on the screen, either MIDA, who does it in line with the Promotion of Investments Act. They are guided by the PIA, they follow the PIA, and it is under the PIA that many of the incentives are granted by MIDA. At the same time, there are also other incentives available under the Income Tax Act. So the Income Tax Act, as all of you are very familiar, is the one that is managed by the Inland Revenue Board. So Inland Revenue Board has got its own grants or benefits to the public and subject to conditions again. And similarly, MIDA manages the PIA benefits, and we will come into shortly into who does what. Who do you approach to get any particular kind of incentive that you hope to utilize to minimize your taxes? Of course, what is the objective of a tax incentive? A tax incentive obviously must bring you benefits, and those benefits are either exemption from taxation of certain kinds of income, either full exemption or partial exemption, and it is all, of course, never forever. It is for a particular number of years. So one is exemption. The other one is partial exemption, meaning you don't get 100% exemption, but you get maybe 70%. The usual threshold is either 70 or 100. Then the other possibility is you are taxed at a lower rate of taxation rather than the 24%. It might be less, it might be 20% for a given number of years, however much your income is. And the third one or the fourth one is regarding expenses. Under some of these benefits, you can claim expenses again. This we will come to later as further additional or increased expenses. So these are some of the benefits that you can get, which are given either by MIDA, which is, I think, under the Ministry of International Trade, and also by the Inland Revenue, who would be guided by the Income Tax Act. Oops. Right. Okay, now this is the program that we have today to give you an idea of what is in store. And we start off with something that is quite necessary, that is an introduction. Right now, I'm doing the first portion, that is the introduction into this whole concept of investment incentives. Then we move on to accelerated capital allowance. What is it? When is it available? What is the benefit in this? I will come to that in a short while. And I must confess that I am not a big admirer of accelerated capital allowance. I'll explain to you later why, but nevertheless, it is something that under certain circumstances may be extremely beneficial. So I'll explain that, of course. Then we come back into reinvestment allowance. Now, just to compare the two, accelerated capital allowance and reinvestment allowance. The first one is under MIDA. They are the ones who approve it. The second one, reinvestment allowance. Nobody approves it. You approve it yourself. You are the one who decides, who determines whether you qualify, what are the activities and the expenditure that qualify, and you claim reinvestment allowance on your own. I'll come to that, of course, when we do that in great detail. Now, reinvestment allowance is the direct opposite of ACA in my mind. It is very, very good, very, very beneficial, and it doesn't cost you a cent. All you have to do is examine your circumstances. If it's confirmed that you are due RA, claim it and live happily ever after. At about 10:30, we have a short coffee break. Then we come back and we continue with incentives for manufacturing, followed shortly after that by small and medium scale enterprises. Now, the idea of this entire event today is to focus on those areas where the bulk of those participating would benefit from. So this doesn't mean that everything for which an investment incentive is available will be touched on here. No, for obvious reasons. Many of that do not apply to the man in the street, to the people carrying out common activities, common industrial action. No, we don't include those rare things because then it would be intruding into the time available. Some of what I'm going to cover will then have to be shortened, which means maybe some important aspects may have to be overlooked. So I am attending. Of course, there are some which not everybody would participate in, but nevertheless, it is useful and it is therefore included. So by and large, it covers most of what people or the entrepreneur would be active inwards or into, and the really unusual ones are not touched on here. So that would apply both for manufacturing and small and medium enterprises. The idea being to let you know what is available, and if it is relevant to you, to claim it. As I said, it's a very straightforward thing, easily achieved, and I would always say, if you qualify, claim it. Now, of course, when I'm speaking to you as you being here as part of a city event, I'm sure the bulk of you are tax practitioners. You are either tax agents, tax advisors, tax consultants. You are here to understand a somewhat difficult subject in greater extent so that you could advise your clients. So when I speak to you as you, I refer to you as a tax advisor, not necessarily the actual business person. Of course, within this crowd that is attending today, there would be actual businessmen or directors or company officials like financial controllers and such. And there could also be other professionals who just want to learn a new topic. But by and large, when I say you, it is to you as an advisor so that you can advise your client who is the actual person who is going to benefit from these incentives. We break for lunch at about 12:30. We come back at 2 o'clock and we do some specific areas of activity. So the first portion of the webinar today will be to speak about the general aspect of incentives, of all the various incentives, pioneer status, investment tax allowance, RA, ACA, all these will be explained in a wider scope. Then we slowly compress it and we bring it down, as I said here, for manufacturing and SMEs. Then we go even more focused into food processing and aerospace. Food processing, you will think, yeah, it's quite standard. We have been doing it for a long while. True. Malaysia has been involved in food processing for almost as long as we can remember. But over the years, we are getting to be more technically advanced in our participation in food processing. And another area that we have jumped into, which is very high tech, which is a reflection of the latest manner of doing some specialist activity, and that is aerospace. The aerospace industry has landed in Malaysia, and I must say we are doing a pretty good job of it. Of course, we have not constructed a space shuttle or a space station, but we are involved in some of the little ingredients that go into this highly developed advanced activity. Then we do R&D, research and development, which is something that the government has been pushing almost forever. They are very aware that R&D is the mechanism to increase our technical know-how, to make the quality and effectiveness of our products that much more useful, and to encourage it. Government gives a lot of incentives where R&D is concerned. So I will be talking to you about R&D. I think I'll be, 45 minutes on it. I'll be speaking quite at length about R&D. Then we come, and along the way, perhaps there would be areas where I obviously would give you computations and working. Just talking to a screen where I think you see me at the corner of the screen, and then you just see a screen, a lecture, and without seeing the numbers and the application of the principle, it would be difficult for you to understand. So along the way, there would be computations and workings to help you understand the subject better. And then we do comparison. All of you know pioneer status. All of you know ITA. Well, all of you know RA and ACA also. Now, I will do some selected comparisons. If you do this, what's the benefit? If you do this, what's the benefit? Comparatively, what is the better approach for you? What is the better option for you? For some, it might be pioneer status. For others, it might be ITA. We will discuss that later in the afternoon. And that, let me assure you, will come with a whole series of computations, which I hope, because it has been done in a step-by-step method, you'll be able to follow to some great extent. Then we have a coffee break at 4 o'clock. The 4 o'clock coffee break may be there, may not be there, because that depends on the time available to us. I'll come to that in a while. Then we do some of the final wrap-up session, which would be the Finance Act 2021 and selected changes. There is, by the way, there's no Finance Act 2022 because no act was passed in 2022. There's Finance Act 2021 and 23. So we will discuss 2021, and of course, in view of the constraints of time, it will be only on those related to investment incentives. I think by and large, everything today is investment incentive orientated, though usually I will go on a wider coverage of the topic. But what I will do is, along the way, I will be sharing other issues that may be having something to do with investment incentives. And of course, I will be sharing with you a lot of my personal experiences, either with revenue or with my own clients. So this gives you a better understanding, more towards how something is to be done. And let me tell you from the start that your dealings with inland revenue can be a very pleasant, beneficial process. Of course, people always say inland revenue is very strict, they are very demanding, they are not cooperative. On the contrary, I find them to be very, very helpful. It's a question of how prepared you are when you approach them, and obviously, whether the law permits you into being given what you are applying for. So I'll be sharing all of this with you, and that's what I hope would make the whole day a very fruitful and eventful one, not just for you, but for me also, because I have learned from experience. I think this, I don't know, I must have given about 500-600 seminars over my years. And in every single one of them, there will be one or two little things that I will learn. So you are here to learn from me. Good. I hope to be an effective source of guidance to you. And let me assure you, I will learn from you also. The other thing is, I'll come to that later. Okay, now questions from participants. Obviously, we welcome questions from you. So you can ask questions at any time. Like Juan Jaslina mentioned, you can, I know the technical aspect, I don't know what to do. She says go into the Q&A box and you type your questions and all, very good. Sure, you go ahead and do that. But I would appreciate, while I welcome any question from you, if you could, please follow this sequence. So, for example, you might want to ask something about reinvestment allowance. So you know you can ask it now because it's coming early in the morning. But if it's something you want to know, you want to ask, what is the difference between ITA and pioneer status? Sure, very relevant question. Everybody wants to know the answer. When I was in revenue, I wanted to know the answer because thinking, what the heck? It's an incentive, isn't it? So that kind of question, please, perhaps you could defer it to later part in the day so that the flow will be very smooth and we don't have to jump from one topic back into another and then forward maybe and back again. So please try and follow the sequence of the subjects being discussed. And I will be keeping an eye. There's a box in front of me. I'm not sure whether you can see it, but there's a box in front of me which shows the number of questions in the Q&A box. So that will give me an idea when to stop my actual reference to the slide, go and answer some of your questions, and then come back to the slide again. So in this way, your questions are handled smoothly throughout the day. Otherwise, if I don't attend to it now, or please, 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 if you suddenly ask questions in the late afternoon, we are going to have a log jam. I will not be able to answer all the questions because remember, I have got my slides to attend to. I have got your questions to attend to also. So if I know upfront how many questions are coming, is there anything so far? Not yet. Then I will be able to time it very smoothly. Otherwise, if I have too many questions suddenly to answer, that will erode into my lecture time. Okay? So what do you do? Nothing but ask questions. Please ask whatever questions. Don't be shy. Your questions, I assure you, like I say in every one of my lectures, your questions are welcome to everybody else. Everybody wants to know the answer. So there's no such thing as a silly question. If you ask, that means it is a relevant question. The only thing that I ask of you is please, 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 don't be shy. State your name. I mean, you don't have to give me your full name, photo, your father's name, your IC number. No, no, no. Just state your name. It shows, in my mind, a better participation in the event. There's a personal touch in your question. So I would prefer that so I can visualize a person Right now, you can see me. I can't see any one of you. All that I can see is my slide. On the side, I see the small side photo of a picture of me lecturing and two of the sitting icons. You can see me. There were some events where, for some technical problem, the participants could not see me. I said, no, we will not proceed until they can see me. Not because of anything, because seeing my picture there and seeing the slide and hearing my voice completes the communication with you. I don't want you to be listening to something without seeing the speaker. So please state your name. I won't be able to see you. I think there are more than 40 of you here today. If I see a picture, it'll be 40 of you, and I won't be able to recognize anybody. So state your name anyway. And I expect from the number attending today, 30 or more questions to be asked. I look forward to it. Some of you obviously will ask several questions. I am always very impressed with those who ask many questions. Please feel free to ask as many as you want. Remember, let me mention again, the only thing I ask you is start asking the question now. Don't suddenly wait for late afternoon. Then it imposes a little bit of time burden on me. Okay, a little bit about me. I won't go too much, except to say that Juan Jaslina has already mentioned my basic background. My basic background is 35 years in inland revenue. My last posting was in HQ as an assistant DG. I left in 2003. That is to give you a time frame. And today we are in 2023. So I've been outside for 20 years. I've been in Texas for 55 years. Longer, I guarantee, than the age of most of you, or maybe all of you. You ask me 55 years, what the heck were you doing? People jump from job to job. I didn't jump. I stayed put. Why? Very simple. I enjoyed this area of work. I enjoyed tax work. Of course, when I joined revenue on 1st June 1968 at the OCBC building in Beach Street, Penang, I knew zilcho about tax. I didn't even know that I had to pay tax. Of course, at that time, you don't pay tax, your income is so low. But I learned over the years. I enjoyed the working environment. I enjoyed my colleagues. I enjoyed meeting my meeting taxpayers or my clients. So it has been a very pleasant experience for 55 years. What do I do now? Well, I do these lectures, but this is only a kerja sampingan. My greater focus is on handling tax audits and investigations, which I must say I've got a pretty good track record of success, and that keeps me really busy. So doing tax work, audits and investigation, and doing these lectures both dovetail together very, very effectively. Apart from audit and investigation, I also do appeals. I don't know, people say I'm a lawyer guru, I can talk well, I can argue well, maybe. So I appeal where an earlier effort may have failed. I appeal again, and I think my additional benefit is because I come from inland revenue, I know what revenue expects. So I give it to them in the manner that they require, and I give it to them before they even ask. So that makes the presentation, the appeal, or the submission that much more effective. And please remember, if I have any success with revenue, it has got nothing to do with my previous service with IRB. It's 20 years ago, the people who I meet, almost all of them never worked with me. I never worked with them. So we do not have a revenue relationship, except perhaps as tax agent and tax officer. So I remember once the manager of a big company came to see me, and he wanted to have a pre-discussion before engaging me. And one of the first things he said was, "Hey, Mr. Joseph, you're from Inland Revenue. So you must know a lot of people with whom you can you can come to very easy achievements or settlement." I was extremely offended. I said, "Look here, let me tell you right from the start. First of all, I do not have such a personal, long-time friendship relationship at all. But if you come to me for that, then you are insulting me. You are saying that I am good only because of who I know and not because I know my work. If that is the case, please, I don't want to have anything to do with you. Goodbye, thank you." And the meeting ended there within 5 or 6 minutes. But the next morning, he called me again. "Mr. Joseph, I'm sorry about yesterday. I spoke to my director, and my director said, yes, he's the kind of person we want to engage." So the bottom line is success with any and every one of you is capable of achieving in your dealings with revenue is to know your work. That is the best advice I can give you. Know your work, know the act, know the public rulings, but you don't need to know the entire Income Tax Act. You don't need to know every public ruling or every guideline given by revenue or issued by seating. No. There are certain areas in the act I don't even look at. I come to that page, I flick it over, and I go to the next one. Meaning, I am good in those areas that I am involved in. Nobody will know the entire Income Tax Act. I can guarantee you that. Nobody. Nobody will know every public ruling. You read what is relevant. When you go to revenue, make sure you know the act insofar as your client's case is concerned. At the public rulings that relate to your client, and of course, you must know details of your client's operations, the manner he does his business. Actual operational matters, he can guide, but the link between operations and law, you must present. So this is where, when you go to face revenue, be prepared, do your homework, do your research. Okay, so this is, oh, I also do MIDA incentive applications, and that's pretty good. Also, MIDA, let me also mention here, can be a very hospitable agency, very friendly. They also give you a cup of coffee when you visit them. Inland Revenue doesn't give you coffee. If any tax officers listening, please, you might want to consider a little bit more of tangible hospitality. MIDA is very, very good, and they will give you options and other choices. So that is what I do. I do MIDA incentive applications. And of late, I find that some clients have, I won't say complain, they have mentioned that credit balances with revenue, their overpayment of taxes has not come back to them and is being stuck there forever. And they say, what is this? Our money is stuck there. We want our money. Well, that is one area that I also assist to seek early refund of your overpaid taxes. I advise and help my clients do that also. Okay, now we come into the thrust of investments and the incentives. Of course, like I said, there are two principal bodies, Inland Revenue and the Promotion of Investment Act, governed by, or rather applied by MIDA. The principal ones there are pioneer status, investment tax allowance, and accelerated capital allowance. All of these require approval, or rather require application, verification, and approval by MIDA. So you apply to them, and obviously all of this would not be identical. It doesn't mean if you get pioneer status, everybody will get the same. No, it depends on your area of activity. The higher technology base you have, the more benefit you can get. But usually the minimum would be 5 years with an exemption of 70%. Similarly for ITA and ACA is, well, it varies from the kind of equipment or asset that is utilized on which you are claiming ACA. That could vary, but nevertheless, it is a benefit that you approach MIDA to enjoy. Income tax, it also has got its own range of benefits to be given. Income tax and MIDA, they got this whole box of benefits. It's like a lelong that you see on the street. Mari, mari, mari. You come, you apply, you take and go. Revenue is willing to give it to you. MIDA is willing to give it to you, except you must fulfill the conditions and you meet other requirements also. So what? Do it. And you get this benefit. You reduce your taxes. You are exempted. You get additional expense claims. Why not? Go ahead and do it. So for under the Income Tax Act, what you get would be the excuse me, the deductions for R&D. That would be under Section 34. The R&D deductions, you get reinvestment allowance, you get incentive schemes, all of which is within the Act. You fulfill, you get it. And then this is also achieved by rules, orders, and other directions, or shall we say circulars issued by revenue. That would be export allowance, double deductions, the treatment of principal hubs. All of this are governed by the Minister of Finance through the Inland Revenue Board. So it is there, go and take it. So I will also from time to time, as you can see in the box here, I'll make reference to public rulings, the relevant ones obviously, and there will be repetition. Sometimes I repeat. I may say something here, the same thing will be covered again, mentioned briefly, of course, again. Now, this is to reinforce the principle and the concept into you. Now, just to give you a little bit about the color scheme, this is not an early Christmas tree. I use the colors for your benefit and my benefit. So when I have a similar color, it means the whole screen is on one topic. It is here, this light green is availability of benefit. Green usually is a concession, a benefit. When it's red, it's a warning, it's a penalty, it's audit and investigation. Then amidst that color, of course, the color will have different shades. That is to tell me that there are different aspects that I have to cover. It is to remind me, okay, you have done the green, now go into the light green. Have you done the light green? It is to remind me. If suddenly there is a brown here or a blue, then I know it is something quite separate, but somehow is connected to the principal topic. And if it's a bright color standing alone, it is to remind me again to speak about something not directly connected with the topic under discussion. Okay, now tax incentives or benefits, either way, it is something that you are going to enjoy either, like I said, through exemption or lower tax benefits. So what is the purpose of having all of this? You see, all of this is given to you without additional cost to you. If you have to buy it, then what the heck is it for? You're spending money on it. So it is a facility, a concession granted to you free of charge by revenue and MIDA, except maybe along the way you might have to pay outside expenses. You might need a consultant to assist you. You might need a consultant to measure your activities from the scientific and technical perspective. Sure. But within the governing body and you, it is free. You don't have to worry anything about payment. So it would be you do something and you gain a benefit. And it should not be if you gain here, you lose something else there. Then it is plus minus zero. No, you don't do that. It is, as I mentioned here, a second bite at the same cherry without additional cost. You are already enjoying something. Now, because of the incentive, you can enjoy something additional. This is basic. All of you know it, but this is just a reminder. So what are the benefits that are available? That would be your exempt income, which could be either full exemption, 100%, or it could be partial. And the partial is usually 70%. That means when you get your income, 70% is exempted, 30% you pay tax. Why not? You're paying tax only at 30%. The bulk of it is exempted. And then you have additional deductions, or it could be you have a lower tax rate. Okay, now we come to the first actual incentive, and that is accelerated capital allowance. I'm not going to explain to you what capital allowance is. All of you know it very well. But here it is accelerated, speeded up. By and large, it means you get the capital allowance due in 1 or 2 years rather than the 5 or 6 years that you otherwise uh, would have it spread over. Sometimes you get your full capital expenditure in 1 year. Sometimes it is spread over 2 years. And the main sections will be under the Income Tax Act would be the Section 154, which is the minister's authority to issue this kind of rules. Schedule 3, capital allowance, of course, income tax rules, and public ruling 7 of 2018, which covers ACA in detail. Now, what is ACA? ACA is either initial or annual allowance being given at an enhanced rate for certain industries. You must qualify for that, right? And well, when I say either, well, it could be both. It could be sometimes initial, sometimes annual, or sometimes both. That is why you will be able to utilize it fully within 1 year and sometimes 2 years. I don't think ACA extends beyond 2 years. Within 2 years, you would have utilized your qualifying capital expenditure. Now, these are mutually exclusive. The 4 incentives, which are ACA, reinvestment allowance, investment tax allowance, and pioneer status, are all mutually exclusive, which means if you get one of these, you cannot claim the other 3. There's one situation here, which I'll explain later, and that is don't go for ACA. ACA is yours. You're going to get it. It's a right that is already available to you. But if you go for ACA, another benefit cannot be claimed. So you lose out on the other. So my advice, go for the normal capital allowance and claim the other benefit, which would be a further bite at the cherry. And of course, that other benefit is reinvestment allowance. You can claim reinvestment allowance where you have normal capital allowance. If you have ACA, then you don't get it. My advice is don't go for ACA. Go for normal, go for RA. You still get the best of both worlds. Okay, now, first of all, ACA does not extend to buildings. It extends only to plant and machinery and such assets. So, and it is also guided by the industry where the asset is utilized. This is, excuse me, to make it easier to identify those areas where you are entitled to ACA. Remember, ACA accelerated, faster, speeded up. The ultimate is the same. You get the same. You spend 3 million. Normal will be spread over IA20, AA20, maybe 4 years, 5 years. But ACA could be 1 year, could be 2 years. But you still get the relief of capital allowance on 3 million. You don't get additional. You get it faster. Okay, for the transportation industry, AA is 40%. Okay, just to sidetrack a little bit, the normal AA, annual allowance, I can never remember, I think it's 10, 14, 20. So it is based on that and it is standard. But here, if it's in the transportation industry, it is 40% annual allowance. So even if initial is 20%, you will get your full allowance in 2 years. First year, 20 plus 40, second year, 40. So transportation is 40 and control equipment is 40%, power generation 40, and automation that will come to later, you will get it at 40% also. So, and is ACA mandatory if you qualify? No. Maybe you're in transportation. You have incurred capital expenditure on control equipment. Must you go for ACA? And they say, no, I don't want. I'll go for my normal IA20, AA20, or AA10 or whatever. So it is optional. So you are the judge of that. You decide what is the best circumstance under which you will benefit the most. So you utilize it. Okay. Now, ACA doesn't extend forever. Some of it may be for specific years, as you will see in the next slide, and some of it may be for a longer number of years. So, initial allowance, you know, capital allowance in the year of incurrence or expenditure, you get initial, and initial normally is 20%. But if you are in the building industry, construction, or timber and tin mining, your IA can be as high as 60%. So 60%, and if let's say your AA is 20%, 2 years, habis. And that is ACA. Now, why do you have such a generous IA of 60%? Now, you will notice building, timber, tin mining, these are all heavy use industry. The location is very unfriendly to assets. The terrain is terrible. You go to a jungle terrain, you go to a rough terrain, mountainous terrain perhaps. The lorries get whacked upside down. So this is to cater for that. And then the annual allowance is 60% for control equipment in certain specific areas of recycling waste, air pollution, power quality. So government now is much more concerned with environmental issues, the waste material. Previously, we used to import waste. Can you imagine a country importing waste from another country and burying it here? If I'm not mistaken, it has stopped, which I thought was the height of idiocy. Another country doesn't want its waste, and we happily go and buy it. And we say, Laman, I'll bury it in my compound. And everybody falls sick. Thank God government is a bit more alert to that. The NGOs have been very active. They've been protesting. So government is taking stock of that. Then computer software also. Now you will notice this and this computer software. Computer software, computerization, technology is another area government is encouraging. Go computer means your work becomes more effective. And in computer, it includes consultation fees, planning, the rights you have got for certain methods or rights or know-how. And of course, some of these would require you to comply with withholding tax. That you will have to comply in any case, whether ACA or not. You must comply with withholding tax under certain circumstances. But for ACA, the benefit is you get these kind of issues also qualifying. Okay, in case you're wondering why are my eyes shifting, there's one more screen in the back of this where the forthcoming slide is there. So I know what is the next slide. I can touch this and move on to the next one smoothly. Now, this is automation. Now, 27. If you sell it within 5 years, then it is withdrawn and no talk also. I don't want to know the reason. I just look at absolute fact. You sold it within 5 years, I withdraw the agriculture allowance. Now, this is just to give you an example of expansion, rubber glove to cotton gloves, gloves, qualifies, car tires, lorry tires, VCD players, DVD players. Of course, nobody has VCD or DVD now. Shirts, blouses, all of that, yes. Then diversification. See, expansion and diversification are very, very similar. So they overlap. That doesn't matter. Rubber gloves to rubber shoes. Yeah, okay. Rubber products. Okay. Cosmetics to perfume. Yes. TV sets, DVD player. Yeah, okay. Diversification. Cooking oil, and from oil you make soap and wax. Also believe clothing and textiles. Now, either way can. Previously, if you are doing manufacture of clothing and you want to go downstream into textiles, it was allowed. If you are in textiles and you want to go upstream and manufacture clothing to run your textiles, upstream, not allowed. But now some intelligence and sense has come to the DG, to Inland Revenue, and they allow it either way. Textiles to clothing, clothing to textiles, both would qualify for RA. Okay, we come to agriculture project. I'll come to that in a while. We'll take a short break. Instead of 15 minutes, you're not going to go anywhere, and you're all sitting in the office. I'm not going to go anywhere either. We come back at 10:40. Okay, then maybe I will do a few of the 3 questions already asked, and then we continue with RA. Okay, short break, 10 minutes, 10:40. Thank you.
Over to you, sir.
Okay, thank you. Do I need to share the screen again?
Yes.
Okay, thank you. Okay, like I said, I'll just sidestep a little bit and do some of the questions. Let me see what the questions are. Okay. Okay. A company started business 20 years ago, is buying a new factory and land for expansion or shifting of production to the new factory. Okay, expansion or new factory. Is PS or RA most suitable and achievable by him? Thank you. Now, RA, if you claim RA, of course, we are going to do this later, pioneer status. If you claim RA, you would be losing out 60% of the qualifying expenditure, the additional expenditure, but you would qualify for capital allowance as usual. But pioneer status is given for a certain number of years. Let us say the standard 5 years. So if your income is very high in the 5 years, and your RA is very small, may as well go and claim pioneer status, or the opposite. Your RA is very big because the qualifying expenditure is very high, and your income in the first few years of activity is going to be small, then don't go for pioneer status, go for RA. So RA, pioneer status, ITA, and all that is a question of numbers. You have to do a projection and see what brings you better benefit from the perspective of scale, of size. Okay, thank you, Nyok Hin Koo. Next one, Stella Seong Ling Sing. Okay, this is a good question, Stella Seong. I am a little bit, I know exactly what you're talking about because I spoke about 4 million and the example was 4 and 2. And here Stella is speaking about 3 and 2. So, but the threshold is 4. Okay. Because if you go by 4, it would seem to be logical. Then you get only part of an asset. You get an additional 1 million from the second 2 million. How would that reconcile later when you sell if you sell the thing and all? How do you qualify the residual expenditure? Okay, let me check on this, Stella. If I can, I will try and come back to you, all of you, in the afternoon. Okay, thank you. It's a good question, which let me check whether it's even handled in the public ruling. Okay, thank you. Okay. In slide 18, okay, slide 18 slide. Oh, sorry. Yeah, this is a slide. Okay, slide 18. In case B, why can't it be for diversification? Okay, fair question, but the diversification must be in relation to the original activity. The original activity is car and car tires, or rather car tires. That is the original limitation of activity. Any diversification must be in respect of that, in relation to car tires. Car tires, car batteries, maybe. Lorry tires, yes, got tires. Car bumpers, would car bumpers be qualified? They'll say no. Revenue might later say no because it is too different a product. It doesn't mean everything connected with a car or anything connected with a battery would qualify as diversification. Okay, it must be somehow related, somehow similar to the original product. Okay, thank you. Oh, there's one more. Let me see that. Okay, Nyok Hin Koo, is PS available for an expanding on ongoing manufacturing company expansion? I think the key word here is expansion because it is pioneer status is always given upon commencement. So here, if there's an expansion, you could say the expansion commences on a given period, so pioneer status would be available. Okay, thank you. So this way we can keep in touch with our questions and it doesn't detract from the lecture itself. How do I go into that? Okay, right. Now we continue and we go into okay, agriculture project. What is agriculture? It needs to be defined. Again, all the game except automation. So you have expansion, modernization, and diversification, cultivation and farming. Okay, income, and it includes all of this: land clearing, preparation, planting of crops, irrigation, plant and machinery, access roads. All of this must be capital expenditure, meaning initial. So the crucial thing to remember would be a simple thing like planting. Planting means planting for the first time. If you replant, it is not capital, it is revenue expenditure. You have planted palm oil in your plantation. 15 years later, you want to cut down the trees because they have reached or they are reaching the end of their lifespan, and you want to plant again with oil palm. Now that is replanting. That is not capital. That replanting expense can be charged directly to the accounts as normal expense. So that would not be eligible for reinvestment allowance. Okay, so reinvestment is planting. It's vacant land. You clear the land, you chop it, and then you go and plant palm oil. Yes, that would qualify. Okay, then agriculture for any of the following purposes: cultivation of rice and maize, vegetable, roots, fruits, livestock farming, aquatic products, other approved products, which they have said include food and fruits. Okay, now livestock is all animal except for the world of me. I can't understand why not chickens and ducks. Originally, chickens and ducks qualified. Now they don't qualify. I don't know why. But I remember reading vaguely something. Chicken and ducks have come back for some other entitlement, but not for reinvestment allowance. So agriculture is those towards food. So would the palm oil qualify? Would be a good question because it is fruit and palm oil can be eaten ultimately. So I would say yes, and it's definitely part of agriculture. Okay, now 70% or 100%. What does what does reinvestment allowance give you? Now, the activity. The activity is manufacture, and the qualifying range of exemption or utilization would be if PE is achieved, you get 100% of RA to be utilized against you. RA is always 60%. The utilization is 70 or 100. If PE is achieved, then the full statutory income can be offset by RA. If PE not achieved, then it would be 70%. In agriculture, you get only 70%, not 100%, whatever it is, because the concept of PE does not come in. Of course, the obvious question then would be, what is PE? PE is process efficiency ratio, which is approved by the minister. It is something to do with production levels, production achievement. Frankly, I've seen the formula. I can't make head or tail out of that. So if you reach the PER, you can claim 100%. Otherwise, the product is of national or strategic importance, where it's usually high-tech. Wherever you are going for above from the standard, you will need to get approval. So you get promoted products which are of a high technical nature, specialized equipment, contract R&D where you do R&D for other parties, and automotive components. These are some of the examples that directly qualify for 100% utilization of RA against statutory income. Okay, now this is just to go into a full-fledged example of reinvestment allowance. And in this case study, the qualifying expenditure in 2020 is 3 million, right? Now, standard thing is, first of all, 3 million, RA is 60% of 3 million. You get 180. That 180 is already available to you for YA 2020, immediately available to you. At the same time, the 3 million, original 3 million comes to you in a staggered manner as capital allowance. So 3 million comes as capital allowance over the next whatever number of years, let us say 5 or 6 years. And the reinvestment allowance comes to you immediately. So you use it immediately. And the only restriction is if it is standard, you can use the RA against 70% of statutory income. Only 70%. And any additional QCE in the next 15 years will also qualify. After that, from the first year, the barrier comes down. You cannot claim additional qualifying expenditure. The one available, if still unutilized, can continue to be utilized. Okay, so how do you work it out? The qualifying expenditure is 3 million. RA is easy. 60%, 180. Statutory income is 1.2. The amount to be utilized, available to be utilized, is 70% of statutory income of 1.2, which would be 840,000, meaning your 1.8 million can be offset against 840,000. The liable amount, there will always be a liable amount, which would be 30% of statutory income, 360. This is fully utilized because the RA is more than that, and the RA carried forward would be 1.8 minus 840, which will be 960. So this is carried forward to the following year. Now here I say, if the RA is available for utilization against 100% of statutory income, then this full amount will be utilized, or rather will be consumed. 180, 1800 minus 1200, the RA to be carried forward would be 600,000. Okay, but the more tricky one is this, where it is only 70%. So you 30% you pay tax, no talk. The 70% you work on it and compare the RA available. If the RA exceeds, carry forward. If the RA is less, the surplus is brought into tax as part of the 30%. Okay, now you will notice that I brought back this slide. Now this is to discuss the issue of automation. Let us say this was done in the automation. If you have already claimed capital, accelerated capital allowance, then this will not be available to you. This 1.8 will not be available to you because you have already claimed ACA. So my advice is, don't claim it, or claim only on that aspect which is not available for reinvestment allowance. Remember, ACA is only a question of speeding up. Here, it is speeding up. You will, at the end of the day, get your 6.5 billion expenditure coming back to you as capital allowance. Except that in the first year itself, 4 million is used up, is consumed. Good for you if you want it that way, which means in subsequent years, you have less to utilize. So again, whether it is ITA or it's pioneer status, work out your numbers from your projected figures. Okay, now you come to this concept within reinvestment allowance, integrated activities. Now, integrated activities do not directly fall under the DAME measurements, but you could argue that it is a follow-on, it's a flow-through from the original activity. Of course, the 36 months condition remains. So, for example, if you are a sawmill and you go now into furniture making, you could argue as diversification, or you could also argue it as integrated activities, or where it is a bit more distinct. You were formerly only in agriculture, that means planting. Now you go into manufacturing. the canning of the products that you plant, that cannot come under DAME, but it could come or it would come under integrated activities. So what are integrated activities? Where they can be taken as one business. Planting and canning viewed as a whole, they are one business made up of two components. And you could also do canning from products bought by third party. Of course, when you apply for the reinvestment allowance computation, whatever relates to purchased items for your canning, that will not be considered for reinvestment allowance. Only the equipment that processes your own products can be considered for replanting. And you do an apportionment based on maybe the cost of producing your own products over total cost to show what is the element of the equipment that can be apportioned as replanting allowance. Okay, now this is in the service sector, and this we have crossed over now into Schedule 7B. All the while here, the earlier, I don't know, 10 or 12 slides, we were dealing with Schedule 7A. Now, Schedule 7B is incurred qualifying expenditure for an approved service project. Again, the figures are 60, 70, unless specifically they are allowed 100, 100. Okay, and what is an approved service project? It means related to transportation, communication, utilities, or other subsectors within this. Other subsectors within these three: transportation, communication, and utilities, which is the generation of power and water and such, and it needs to be approved by the minister. Okay, we continue with the requirements of statutory income. Of course, what happens to the exempt amount? You have got your statutory income, you offset your RA against it. That amount, which is not subject to tax, is exempt income. What do you do with it? Well, you keep it in your exempt account, exempt income account, which means nothing, is only for statistical purpose. Previously, yes. When dividends were taxable, yes, but not anymore. It is only for statistics. Government wants to keep tabs on how much of statutory income was exempted by way of reinvestment allowance. And then what do? You maintain, you keep this form LHDN RA 2007. It's a very complex form. You keep it, you fill it, and you keep it. You don't have to submit it. But if you're in agriculture, you need to get an approval letter from the Minister of Agriculture. Manufacture, no. You are the master of your own reinvestment allowance. And what would happen to you? Nothing much, nothing dangerous. You will be subject to audit. Almost definitely. Not because revenue wants to withdraw an allowance that you are enjoying, but just to double check that the utilization of reinvestment allowance has been correctly done. Because there are so many steps, beginning with this, let me go back to that slide which I said was of most importance, this, slide 19, particularly identification and determining qualifying expenditure. Revenue will be focusing on that. If you fulfill that, and there's no reason why you should not. If you fulfill that, sure, let them come. Revenue will do audits. It is their right, it is their duty to do so. And if you do it correctly, they'll come and examine and they'll say, okay, bro, all is fine, nothing. Your RA is okay. So remember, on a wider scope, being subject to audit or investigation does not have to be the end of the world. Revenue just wants to verify. They have reason to believe that there could be something wrong in your declaration of income, in the maintenance of your records. So they just come to you to verify it. If you meet it all, fine. Like I have said before in other events, I was doing a food production company. But I was doing some advisory work for them, not audit or investigation. And while we were talking with the directors, just to give you scale, their annual income was about 260 million, which means in 4 or 5 years, their revenue was 1 billion. So while I was chatting with them, I asked them, have you ever been audited or have you ever been audited? And the director said, what do you mean audited? We have been investigated, which is the big brother to audit. I said, wow, Mati meant you if you were investigated. He said, no. They came, they spent 2-3 days with us going through all our books and records. They took back so many things. Then we wrote back and forth, a lot of communication. Then suddenly, quiet. 5-6 months, no word from them. We're getting worried. 7 or 8 months later, they write to us. Further to our visit to your office on this date and the examination of your books and records and your explanation, we are glad to say that there's no action required from the investigation. Therefore, no additional income or additional tax. Thank you very much. $1 billion, 1 billion ringgit, not a single cent in additional tax. What does it mean? It means that the company was very proper in the maintenance of its records and the preparation of its accounts, which must mean that their tax agent and their accountant were equally very strict to ensure that everything was in line with the Income Tax Act, which is what you are also entitled to. You, tax consultant, you have that duty to advise your client. But of course, I know your handicap. Your handicap is usually your client gives you the records and accounts 3 weeks before deadline. You don't have the luxury of time to sit down and chat with him and go through and advise him and tell him this and tell him that. You are rushing together with all the other clients that you have to finish it in time, to send it by the deadline. In the free period, after the peak period is over, you'd ask him, hey, I would like to have a chat with you about your tax matters and all that. Almost the first thing he's going to ask you is, are you going to charge me? And you will say yes. And most probably he'll say, in that case, never mind. If revenue bites me, I'll face the bite later. Well, let him face it later. But if you have the time, call him in and go through his records, his activities, and to see whether he can gain further benefits. Recently, I was doing a case where I was supposed to do one aspect of taxation. And I normally will call for the accounts and the income tax computation. And when I saw that, I saw some, I think it's agriculture allowance, which is to be claimed annually. For some reason, the accountant did not claim it. He capitalized it, and he says 3 years later, he's going to claim it. No, you claim agriculture allowance in the year it is incurred, the expenditure is incurred. So that is bad. And when I saw the figure, that the total allowance that he had not claimed, it was about 2-3 million, 750,000 tax. Company is paying tax. I said, we should claim it. We can go under errors and omission 131 and claim it. Now he is stuck. If he claims it now, the company is going to ask him, why are you claiming it now? Why did you claim it in the relevant year? The new guy came, he saw it. You are the house guy and you didn't see it, which is bad. So I leave it up to him. Let him decide. Because if he chooses not to claim, also dangerous. If later the company comes to know of it through some other source, they say, why didn't you claim? Because of your oversight, we lost 750,000. So these are areas where you have to be cautious. Okay. Now, sometimes just to break the monotony, I will input something very, very simple. You don't have to think. You just follow. I know most of you would be sleepy. I am sleepy, and you handle something simple. Now, this is the question of rebates. This is a special rebate, which I think is very generous by government. It is given for a certain window. That window is for those companies who commenced from 172020 to 31/12/2021. As long as you commence in that period, you can claim this rebate for 3 consecutive years of commencement of 20,000 each year. Hey, that is something really good, and it is available only for SMEs, LLPs, meaning capital 2.5 million or less. So why not? Well, you have utilized most of it. Let us say you commence in 2021. You still have 2022 and 2023 to claim. And so why not? If 20% rebate, understand, it is a rebate, not an expense, which means it is dollar for dollar settlement against tax. So if a company comments anytime now, you still can claim. Okay, you may have missed out if you comment, let's say in 2022, of course, out, you don't get anything. But you comment in 2021, you can have claim for 2022. You can claim under errors and omission. 2023, you can claim because it is still to come. Okay. The next few slides, or rather the next few topics are relatively easy to understand. They're not complex issues, not very in-depth principles and such. It's easy to understand, and they relate to export allowances, which are single, further, and double. Of course, the word itself gives you an idea, single, further, and double. So what does it mean? Okay, we will go through this slowly and handle it one by one. Oh, I forgot to tell you, because half my eye is on the slide, on the question. There will be a poll question posed to you later in the day. See? This is the poll question. You have all seen it. You know what it is. This will come in the latter part of the evening, where I will ask you 3 questions based on what we have discussed throughout the day. Those questions are relatively easy, not relative, they are very easy. All you have to do is listen to what I'm telling you, remember it, remember the slides, and you will be able to answer all 3 very, very correctly. That will be asked later part in the evening, maybe about 3:30, 4 o'clock. So you are asking me questions, yes, I will ask you 3 questions based on all that has been discussed. Not so far, and also what else will be discussed. Now, export allowances, the law in respect of Section 8, which is residence of companies, Section 33, expenses allowable, 39, expenses not allowable. As you know, there are 3 expense sections. 33, expense incurred in the production of income, allowable to all sources of income. 34, special deductions available only to businesses. And 39, expenses not allowable. Okay, then you have the pengumuman umum, the notification 115 to 117, and several others, and the public ruling 2013. And these are governing export allowances. It looks very complex when you look at all of these PUs and all that, but it is very straightforward and simple. It is almost yes or no and how much. What is an export allowance? Export allowances are allowances or other expenses already allowed. Just like reinvestment allowance, which is under Schedule 7, but these are under the normal allowable expenditure. Whatever you have allowed, you have claimed under 33 is allowed again as export allowance. But the only condition is it must. Okay, now here we are coming to some administrative issues. You have to keep separate accounts. Pioneer's activity, non-pioneer activity, pre-pioneer, and post-pioneer. So you have what? 5 activities. You have pre-pioneer as for all. Then within the pioneer, that would be pioneer and non-pioneer, and then post-pioneer. Four sets kinds of accounts must be kept. So you keep it all the while. And if you're required, you submit it to revenue, right? Now, losses. Losses, there are two kinds of benefits. First of all, pioneer losses cannot be offset against non-pioneer income. Non-pioneer income, you survive on your own. You pay taxes on that. The pioneer loss is of no comfort to you except in a certain circumstance, which I'll come to in a moment. If it's an ongoing activity and there is a non-pioneer loss, it will be offset against the 70% exempt income. It's exempt, so you don't really gain any benefit. If the pioneer period ends with a loss, the 5 years is up. The company, for some reason, did not make any money. It had a loss, but the company continues. Now, at that point, when the pioneer status has finished, the loss can be carried forward to the post-pioneer years, where income from post-pioneer activity can be offset by the loss that was suffered in the pioneer period. Similarly, capital allowance. Let us say for some reason within the pioneer period, there is capital allowance carried forward. That carried forward can be offset against post-pioneer adjusted income. Within the pioneer period, no. Post-pioneer, yes. And of course, you maintain separate accounts between exempt and non-exempt and all that, which, as I said earlier, doesn't really matter now. It mattered, I think, in YA 2008 and earlier, when dividends that were paid out of exempt accounts were exempt. At that time, dividends were taxable. Now they are not taxable. So this would be more administrative for statistical purposes only. Oh, next one is ITA. I'll do that later. I will go into some of your questions, and I think we will be perfectly in time. Let me see what are your questions. Okay. Okay, the next question, the first one we have already answered, and next one is by Lee Chuan Mo. Okay, this is regarding childcare and kindergarten. I'll be covering that later, so we will handle it later, specifically on that. Then we come back again to Stella Siong again. Okay. Stella's question, by the way, I think this is Stella's fourth or fifth question, which is what I say. I appreciate these participants who ask a lot of questions. They come to this event with one thing in mind. I want to learn. I will ask questions. That is absolutely great. And following closely behind is Nyong Hin Koo. So these people, these participants who ask a lot of questions, I think they are achieving the purpose of this event. So well done, Stella and Nyok. Okay, can you please explain how to differentiate between further deduction and double deductions? Okay. Further deductions, the expense is already allowed. It is an allowable expense already allowed in the P&L, like traveling, warehouse, cost of samples and all. You charge it directly to the P&L, it is allowable, no question. But because it is related to export, you get it again as further deduction. So you get effectively on that expenditure, you get another claim. You get 200% on 100%. Now, when you come to double deduction are expenses that are not allowable in the P&L because they are capital or initial and such. Maybe like the example I gave, this double. Single is where it is not allowable in the accounts, but allowed as single deduction because it relates to maybe the registration of patent in Malaysia. Double deduction is not allowable. If you charge it to the P&L, you add it back in the income tax computation. Double deduction of that expense. Then in your computation, you claim double the amount if it relates to some essentially a registration activity carried out outside Malaysia. In the example that I gave you, you register a patent, let us say in London, costing you 35,000 ringgit. You charge it to your accounts here, not allowable. You add it back in the P&L. Or you add it back in your income tax computation. But further down in your computation, you claim double deduction for export allowance. Maybe you put in bracket, registration of patent, 35,000 times 2, 70,000. So that is how you differ between further and double deduction. Now this seems to be simple or it seems to be complex, but it handles a very crucial issue. When is what? Okay. Now, slide 42, condominium, rental income and all that. Question of business source. There is a management service company are done by the management office. Now, the management office, if I'm not mistaken, it has got nothing to do with the actual generation of income. It is more the taking care of the building. What is it called? There's a word for it. Property management something. I can't remember, but there's something which is generally made up of the residents, residence management something. I can't remember the word. Now, they are not the owners. If they are the owners of the property and they have a management office, actually the management office is called a management office because it caters to the building in question and they fulfill those two conditions, that it is maintenance and support and it is the full-fledged, maintenance comprehensively and actively provided. So two things, maintenance and support services and comprehensively and actively provided. Your question, Hinku, is if it is provided by the management company. So I'm not sure what you mean by the management company. If it is the company set up by the owners, then sure, it would be allowable. So, but if it is those normal things, the one required by law, every complex, every area must have its own management or community agency or what, that would not be done by the owners. The owners will say, I got nothing. Revenue will say, you got nothing to do with this. You are operating separately. This is done to fulfill a government law. Then it would not be. But if it is the owners carrying out the management comprehensively and such, then yes, it would qualify. Okay. Stella, you are in full go. Good. Okay. 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 Now, Stella is coming to a practical question regarding the treatment of income where it's a business source. First thing is business source accruals. Accruals means the rent that is due to be paid. Good. So the company has been properly declaring the amount that it is due to receive. So number of units let out, multiplied by the rent for the month let out, and you arrive at the total for the year. But the tenant fails to pay for several months, and then he runs away. You don't. So what do? The first thing you have to remember is for those months where he stayed, you would have treated the rent payable as part of your accrued income. Then you hilang. He hilang. What do? Bad debts can only be claimed in the following year or later. It doesn't have to be the following year, but it says not in the relevant year. You are speaking about 2022. For 2022, can the returns for 2022 be revised? No. You will not revise 2022. Your 22 will show actual rental income on an accrual basis. And that fella ran away in 2022. And you try in 2023, 2024, 2025, you try to catch that fella. You cannot catch him. Then he said, no, we can't catch him. Your mechanism to repair yourself, Stella Siong, is to claim a bad debt. At that point, you would have, let's say in 2024 or even 2023, you would fulfill the two requirements. A, the rental unpaid was previously recognized as income in 2022. B, the rental unpaid is now irrecoverable on the grounds I cannot find the guy. The guy is lost. So your satisfaction for the accruals is you claim bad debt when you decide it is irrecoverable. Declaration of income, you did correctly in 2022. So you don't revise your accounts for 22. You claim it as a bad debt, not in 22, but in a subsequent year. It can be any number of years later. Okay. Stella Siong, you ask, why does approval need to be obtained from Minister of Agriculture for agriculture? That's what the law is. But for manufacturing, no. You decide. You're talking about, Stella is talking about reinvestment allowance. For manufacturing, no. It's why I said over and over again, you be careful when you consider it. If you have made sure everything is correct, you are entitled to reinvestment. This is the amount. This is how you utilize it against SI and all. Go ahead. You don't need any approval. Okay, that's how the law is. Okay, I will just handle, is this the last question? Stella's got a few more questions lined up for me, which I'll do later. Okay, last question before we break for lunch. 60% of SI is exempted by reinvestment allowance or whichever, pioneer status or investment tax allowance. 50, no, actually, INCO, it is 60% of qualifying expenditure that comes for RA. And it is offset against 70% of SI. Okay, never mind. We go on 70%. So now you are talking of 70% gone into exempt account. And from the exempt account, you are paying a dividend. What should the dividend be called? Exempt account or single tier? You can call it anything. You can call it happy birthday account. Doesn't matter because all dividends are exempt anyway. Well, because there is no classification of dividend now. So you just show dividend, tax at source nil, gross income same. And when the shareholder receives it, he says, thank you very much. He's not going to declare it because dividends are no longer liable. Okay, all right, we take a break. We come back at 2 o'clock and we continue. Let me see what else does Stella have in store for me. Okay, there are quite a few more questions. Some of them are very... Okay, we will continue later when we come to Stella's next question. And okay, have a good break, lunch break. I'll see you all at 2 o'clock. Okay, thank you very much.
Thank you, Mr. Vincent. Ladies and gentlemen, we will break for lunch and please be online at 2 p.m. for the next session. Thank you.